Thanks for tuning in to yet another episode of Where Do Millionaires Invest? If hitherto we have learned about some exotic products that the rich use to become richer, our guest today, Satheesh Krishnamurthy of Axis, says there's absolutely no need to go exotic, and somehow, sometimes, the simplest of investing techniques can work really well. Hear him out in today's show.
Hi everyone, I am Satheesh Krishnamurthy and I head the private, premium and third-party products at Axis Bank. I'm here today to be part of this very exciting show. This show from where we can learn what it takes to emulate the rich. What do the rich do differently? How do they really make their decisions on employing their money to become even more richer? I'm sure all of us can learn from them and make sure that we reach the pinnacle of wealth ourselves. Really looking forward to this show.
Okay then, emulate the rich. I think that's a good way to get rich, and the team and the man who heads that team, which advises a bunch of these rich, Satheesh Krishnamurthy. He's the EVP and Head of Private Premium Banking and Third Party Product at Axis Bank, joins us right now in our office. Satish, great having you. Thanks for joining in.
My absolute pleasure, Neeraj.
Okay, so Satish, how do you when you think about this business, and you've done this in your previous avatar at Citi, and you're doing this now for the last 7-8 years at Axis too, how do you think about it? I mean, what is the secret sauce, if you will, that the rich of the country have, and that people like you who advise these rich have or advise them?
So, I think it's a great question, because all of us deep down are working very hard to become richer and richer by the day. So I think what I've found as the DNA or at the root of getting richer, one is, of course, you are extremely proficient at what you do, right? So that is needless to mention. But I think what sets them apart is the way they've been able to manage their own money, right? How do they manage their money in a way that that money is growing continuously? And for that, of course, bankers like us come in, right, to help them navigate. So the science behind this entire pursuit begins with getting your goal setting right, right? Am I being too greedy? Am I being too conservative? In other words, am I being overly aggressive, or am I being too conservative? Now, these are very important questions that need to be dwelled on, especially with the richest. Because bear in mind, I think it was Warren Buffett who said it, that you don't have to become rich twice. So once you become rich, I think it's very important to consolidate your position. So towards that end, I think the secret sauce, so to speak, is to get your asset allocation right. Very, very important, because the amount of capital that you deploy to the 6 hitting winners becomes very important, right? If you end up allotting very little to your multi-bagging ideas, chances are that you will get very suboptimal returns. So it's very important, whatever be the goal that you have in mind as a multimillionaire or somebody who wants to be in that position, it's very important to get your priorities right in terms of the asset allocation. And then, of course, once you get the asset allocation right, you then need to choose the right manufacturer who has expertise in managing that asset, right? So the entire mutual fund industry, the asset management industry comes into play. We work with over 20 top asset management companies in India, and we help customers then choose which should be the right products from those asset classes. So I think that's how the journey gets navigated. And I would say important other elements that come in is the time horizon for which that asset needs to be deployed. What is the target return that needs to be understood. The tax treatment of those products also need to be well and truly understood, so that there is never a mismatch between you wanting the money at the end of a particular period and this corpus getting locked for a longer tenor. So you can't have so to speak, an asset liability mismatch in your own personal balance sheet.
Yeah, so important. So how big is this market, and how big is it slated to become, considering the number of millionaires which will only expand as time goes by? And how is it that you at Axis are doing this job of catering to those clients differently than the rest?
Yeah. So the size of the market, right, is always the starting point of any business plan, right? So I would say, from multiple estimates that we have made, it's easily upwards of 500,000 Indian family households, right, who would qualify as dollar millionaires, right? I think this data is broadly in line with multiple studies on this subject. So let's call it anywhere in the 500,000 to 600,000 households. Of course, the COVID period has been a bit of a topsy-turvy equation creator in this number. But let's just, for easy math, let's take 500,000 odd households, right? If you were to compare ourselves in the dollar millionaire list of countries, right, some countries are very clearly ahead of us. US is, of course, the granddaddy, right? China is, very quickly, bridging the gap. There is Japan, there is Germany, there is UK, and then is India. And I would believe that in our journey from, let's call it a $3 trillion economy to 5 trillion and then to 10 trillion, there is going to be massive wealth creation, right? Entrepreneurship is up and about. I mean, we are seeing the number of startups that are flying thick and fast, and notwithstanding the short-term aberrations, which are part of any great business. I am very strongly convinced that we are on a secular bullet train to grow wealth in this country in a massive way, right? And now I'll come to your second question in terms of what really differentiates Axis Bank.
Yeah, I mean, I'm just trying to understand, how is it that you would think you would want to advise this set of people, because they would have their own thought process as well.
Yes.
They would be talking to multiple houses.
Yeah.
So how is it that they think, and how is it that you do it differently than the rest of the people who are trying to do the same thing?
Yeah, so I would first begin by outlining our core value system, right? It's very important to get that alignment right. When I'm a banker and I have a client who wants me to help him manage, him or her, by the way, we have a lot of very successful women in this arena, getting very wealthy, right? There are multiple businesses. So what they are looking for is, first, I call it the 3 I's, right, which they look for in any top wealth manager. The first is integrity, right? How strong is this banker walking the talk, right? And that's what integrity is all about. The second critical differentiator, the second I, is the intelligence, which means that, like you said, they are all very successful. So if I'm not able to add intellectual capital to that consumer, to that millionaire's understanding, I think we would fail. So we are very clearly very strong research backing. We leverage right from our Axis economical research, our treasury, and so on. So we come with a whole basket of intelligent inputs. And the third is about innovation, right? Both in terms of the way we provide that input, provide that product, and the best-in-class products. The requirements of these dollar millionaires at the top of the the ladder is almost institutional in nature. They are as good as institutions by themselves.
Sure.
So we therefore need to think of them as almost managing a top corporate. If I were to go with a presentation to a top corporate, what all do I need to cover? So when I meet a top HNI, we give all the attention that we believe we need to provide to make sure that whatever be the goals of that person, we are able to completely ensure that we do great justice to that. And the other critical belief is that this is not a 1 quarter, 1 year, 5-year journey. This is a lifelong relationship. I think the relationship of a wealth manager and a customer is a very sacred one.
Sure.
Right? So it's very important to understand their temperament, their behavioral anomalies, and make sure that they are not reacting sometimes to market stimuli in a way that is detrimental to their wealth creation. So we've got to be very watchful and provide the right data points to make sure that customers make the right decisions.
Okay.
So
Wow.
that's how we think about this.
And how are customers reacting to this? More importantly, what are some of your top clients doing with the monies currently? Is the investing pattern of 2022 materially different from what it would have been in 2020 or let's say pre-COVID? And of course, what is coupled with that? What is your advice to them about how these guys should be going about investing their money?
So, so it's a very interesting question, Neeraj, again. I would say, the standout asset class very clearly over the last 5 years is alternate investment funds. Very, very clearly, I think AIF first came into life in 2012. We are in 2022. And in a very short span of time, and really the acceleration started over the last 5 years. The industry is well over 5 lakh crores, right? And the CAGR of this industry is, I think, 25% plus industry growth. So you can imagine if the top players in this industry, the manufacturers, must be growing much, much faster. Some of them may be almost triple-digit percentage growths.
Okay.
So that's the kind of attraction that AIFs are having. And I'll tell you why. Because of course, the science says that you need to diversify, right? Very clearly, you need to do that. AIFs also help you take concentrated bets, right? When you have deep conviction. So whether these are in the areas of venture debt, it could be on some real estate InvITs, right? So the entire plethora of structured products. So we are able to provide a gamut of these products, which naturally give higher yields in a way, right? Also, we are able to manage the risk-return trade-off that much more nuanced, right? The risk-return at a very simple level is, you have equity, you have debt, and you have, let's say, balance, right? At a very simplistic level. But for you to play the curve much more nuanced, saying, I want to take, let's say, a very high risk, and I'm prepared, and my return expectation, let's say, is annualized 25% CAGR, right? And the risk is well understood. There are products in the AIF space which let you do that. There could be an investor who says that I'm very bullish about the B2B turnaround in India, right? So can I get into ventures as an equity participant, right? And these are in the private market. So these are not publicly listed companies. How would I do that? So there are AIF structures which are created by some of the top names in India, and we work with them and bring those products to our customers. And they're very appreciative of these. And we are seeing in some of these very consistent IRRs of 18-19%, right? So very important, therefore, that one is guided with the right understanding before one takes these decisions, which is why obviously the minimum ticket size in regulatorily is prescribed at 1 crore. And it's meant for sophisticated investors who have both the knowledge and the risk acumen, so to speak.
Okay. And yet I heard you say that before, not during the show, but I've heard you say that the millionaire doesn't necessarily go for exotic stuff.
Yeah, absolutely.
This is there,
yeah,
but doesn't go for exotic
yeah,
stuff
so,
necessarily.
I think, Neeraj, so perhaps this is a bit of a, to some folks it might sound as a paradox, right? Sometimes the beauty of success is in doing the simple things brilliantly. It is not about trying to chase some latest fad or trend and say, oh, can I make $1 gazillion out of that, right? Crypto, I would say, is a good example of that, right? It's like magnet to people who are trying to do something so-called high risk, but you're seeing what's happened. I mean, the markets collapsed over the last 90 days in front of our eyes, right? And you heard the RBI governor talk about it, saying, why would somebody do such things? So therefore, I would say that, if I have to step back, look at the mutual fund industry. What's the purpose of a mutual fund industry, right? If you think about it, the mutual fund industry takes money out of people who have many other things to do, right? Normal retail customers, and retail customers obviously can go all the way up to the richie rich. They have passions, their time is being spent on building the businesses which they know best. The fund managers and the asset managers, their job is to take the money which these investors want to deploy in mutual funds and give IRRs as per the buckets in which they operate. So I think, and you look at the growth of the mutual fund industry, a lot of that is also driven by the way, the dollar millionaires, so to speak. The industry is moving easily at a 15% plus CAGR. 36 lakh crores, I think, was the figure March end. And it was not too long ago that it hit the 25 lakh crore mark. So you can see that, again, this is a secular path. And the reason is very straightforward. You look at the US, the penetration there is 120%, which means an average individual has 1.2 mutual fund schemes with him. Here you're talking of 13% in India. So the opportunity is a 5x, if not a 10x, right now, right? And therefore, you will see a lot of rich folks, and they could choose their plans. I mean, some choose direct plans,
sure.
Right? Whatever be the plan they choose, it's very clear that conventional instruments, by the way, let me also remind people that if you look at the pie chart of all the wealth that's there amongst all Indians, right, and obviously dollar millionaires are a subset of that, real estate would be 50%, 15% is in gold, 15% again will be in fixed deposits. So these three, 50 plus 15 plus 15 is 80%. So households, real estate plus gold plus deposits. So, and you can talk to any Richie Rich, right? Sure. He would have X number of properties, Y number of fixed deposits. So that's clearly important. So the foundation has to be laid, and then you get into incremental alpha creation ideas like the ones that we just discussed a short while ago. So it's important to find that balance.
So what, according to you, is the ideal asset allocation right now?
So I would say the ideal allocation, firstly, has to come from that unique bespoke conversation, right? There is no fit all, right? One size fit all here,
yeah,
right?
But average.
Average. So typically what we find is customers who are in the $1 million plus in financial assets, we've seen roughly 2/3 tends to be in debt, right? Debt, I mean fixed income, right? It could be a portion of it also tends to be in fixed deposits, but it's fixed income, right? And obviously you saw how interest rates have been behaving over the last 2-3 years.
Sure.
Some of those post-COVID was absolute black swan events. So I think 2/3 would be typically in debt, and the rest would be a mix of equity and some structured as well. So that's the way we've seen an asset allocation on an average basis, right?
Okay.
And then we build nuances depending on the size, because bear in mind, this again is a hugely divergent pool. There could be a customer with a $2 million corpus, and there is somebody with a $200 million corpus.
Yeah.
They behave like
chalk and cheese.
Chalk and cheese.
Can imagine. Okay, 2 or 3 quick questions. So we're running slightly short but time, but still 2 or 3 quick questions. How are the super wealthy among NRIs thinking about investing in India?
Yeah, so the NRIs are such a very important part of India's wealth creation story, right? On one thing, we've trumped every other nation. $83 billion of inward remittance, right? When we looked at the data for the last year. So again, the top NRIs look at very many products. One is, of course, their interest in Indian equities is very strong. So direct equity investment is something that they really like. And if you look at the returns of the Indian equity market over the last 4 to 5 years, it's been clearly in the top quartile, even if you compare with other markets globally. Then, of course, they are very interested in taking leverage positions in terms of, so let's say even if I book 100 rupees in a deposit, can I get a leverage against that deposit and look to invest in other higher alpha creating opportunities.
Okay.
So bonds leverage, right? So if they put $100 in a bond, what percentage of that can be leveraged further is something that they are always very inquisitive about. And as you leverage more times, and if you do it intelligently, it increases your alpha. But if you play the leverage game negatively, it can lead to severe capital erosion. So that is where I think astute thinking and the right product choice becomes very important. So I would say NRIs are looking to do that. The other, asset class that continues to be of great interest to NRIs more and more is also looking at real estate, commercial real estate investments in India, and REITs, which can build those kind of structures, are something that are of increasing interest to them. So because they realize that as India climbs the ladder on GDP, the GDP per capita and so on, there are so many more commercial establishments that are getting set in. And there the rental flows tend to be very predictable, right? Imagine top MNCs globally setting up their global transformation offices in India. So rental receipts are very clear over a 10-year time frame, and they would like to be part of that wealth creation opportunity as well.
Very interesting. Now the other aspect, which is offshore investing. One is NRIs bringing money in.
Yes.
One is Indians moving money outside. A common answer from all the guests who've been on the show before you, they've said that the offshore investment appetite has really gone up. What's been your experience?
I think the total corpus through outward remittances that goes out of India is something like $20 billion, right, across all avenues, right? Now, yes, if you were to look at it from a diversification strategy, to take money out of India under the LRS route, $250,000 per person, and typically they combine it with a family of 4. You can do up to $1 million. So people want to create a corpus. It's good money management principle of diversifying from a currency risk standpoint. So it helps from that. Second is a lot of them are also interested in owning global assets, right? Whether it is NASDAQ listed stocks, and there are fund of funds again which offer similar products to tap into that opportunity. There are folks who want to invest in real estate in, let's say, London, they want to buy an apartment. So there are these requirements that the super rich, the ultra HNI have, and we find that there is definitely a clear trend in terms of both sides. I think, see, it's a good cycle, I would say. We are living in a connected world. So as Indians find and build businesses which are present globally, they want to have assets in those markets as well. So it helps build, to my mind, good two-way trade between those countries and us as well, from a big picture standpoint. So we are finding both the inward remittance and the outward remittance growing pretty healthily.
And you reckon the trend will continue?
And I reckon the trend will continue, and it tells you that it's a good sign of a robust economy, which means there is good money flow happening both sides.
Got it. Okay. Before we wrap up, just one final thing, the framework, the framework to get it right now. You're telling me about how the right thinker and then the manufacturer and then the fund manager. In a minute, if you can explain that framework so that it leaves people with a thought.
Yes. So I think if any top, millionaire sits down and says, I want to now manage my money systematically, I think at the heart of success is process, right? And we strongly believe that for there to be consistent over delivery on your goals, you need to follow a process. And that process, like I said right at the beginning of this conversation, starts by getting the asset allocation right. Once you get the asset allocation right, you've got a very high chance of delivering and over-delivering on your goals. Immediately after getting your asset allocation right, you've also got to get your time horizon and taxation understanding very clear, right? So that again is foundational to this thinking. And then you've got to make the right choice of who's the manufacturer who's got the best track record, who's delivered consistent results, and who from that manufacturer, because There are multiple fund managers who belong to the same manufacturer. Which fund manager reflects the core philosophy of the customer in a way?
Sure.
And that's where, let's say, distribution houses like Axis play a part in making sure that we get the choice correct.
Sure.
Help the customers make that right choice, and that should fuel greater and greater wealth. I would say foundationally first the wealth preservation, but also wealth creation as customers choose the right asset classes towards that end. So that's how this core template, so to speak, of success of wealth creation gets built.
Interesting. Some lovely thoughts there, Satheesh. Thank you so much for sharing them with us. And thanks so much for telling us how do your millionaire clients invest.
My pleasure. It was terrific being here with you and your team here.
Yep, thank you so much. And viewers, thanks for tuning in to yet another episode of Where Do Millionaires Invest?